You're listening to The Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here at 1150 AM KKNW, the Saturday, April 29th show. I've built a network of elite industry professionals every week sharing their knowledge and expertise with my listeners. If you're hearing my show at a different time or day, you are listening to a rebroadcast, but you can call the show at 1-855-400-1150 or online at themoneyhour.com to ask any questions or to get connected with the guests that I have on the show today. And in studio right now, John Kotalik with Kotalik Farmers Insurance Agency, understanding what generates the rate you pay on your home and auto insurance and how you can use this knowledge to reduce your insurance cost. John, thank you so much for joining me in studio today. Very excited.
Thanks for having me today, Tina.
And a little bit about John, owner of Farmers Insurance Agency in Downtown Redmond, working to make sure that autos, homes, and lives for the average consumer are adequately protected. John is a big advocate for protecting his clients using the tools and adding an umbrella to get coverages up to the level where they protect the average consumer in the Seattle area. John also works with business and commercial property owners to insure them against most losses, from restaurants to manufacturing plants, from wineries to laundromats, from contractors to dentists, and everything in between. John has over 30 years of extensive business and insurance experience in the Puget Sound area that he brings to bear in advice for his customers. So, John, excited about our topic today. Anything regarding saving my listeners money is awesome, and to really get an understanding about insurance and how it works. So our conversation today is understanding what generates the rate that you pay on home and auto insurance and how you can use this knowledge to reduce your insurance cost. So, John, could you give me a brief overview on how the insurance industry primary underwriting for home and auto creates a quote for the premium that they're charged to the consumer?
Yeah, I'd love to, Tina. First of all, let me start by saying that it's all about a mathematical formula. Mm-hmm. But before I talk about the formula, remember that insurance technically is a risk transfer mechanism that ensures full and partial financial compensation for the loss and damage caused by events beyond your control for the insured party. That's a mouthful. In reality, what it really means is that what most people think it means is that you're transferring your risk directly to a company. And you are. But insurance companies pool clients' risk into groups or pools to make payments even more affordable for the insured and less risky to the insurer. That's what you're insured in. You're insured in a group. So the pool is messy. It's messy and your rates go up. If your pool is clean, your pool actually helps you reduce your rate.
Okay. So what or who manages the rate factors or the rating factors found in this pool of insurance?
Algorithms.
Or insurers.
Algorithms.
Yes.
They drive the insurance quotes that farmers and every company out there uses today. That's how we can do it in the blink of the eye. It takes me a second. But that algorithm is a mathematical formula that's comprised of a lot of data that we collect as insurance carriers about what we know in the public. So who's a higher risk, what those factors are. Every company does a little bit differently, which is why every company gives a little bit different rate.
Yeah, makes sense. So, John, what is the main factors used to determine rates for auto and homes?
In the state of Washington, as in most states with the exception of California, credit scoring is really important.
Yes.
But it's not just your score. It's a lot of other factors that we call segmentation. So if you have a high credit score and it's been around for 35 years and you've got great income, that'd be very different than somebody maybe has a really good credit score, but they've been employed for 5 years. And we just don't know that much about them.
And that makes total sense. So it's kind of a common sense when it comes to, how these factors and algorithms work. So what about other factors that affect the way insurance companies rate their customers?
Your age. Anybody that's got a teenage son knows that.
And that makes sense.
Your gender. Believe it or not, contrary to popular myth, women are cheaper to insure than men.
Yes.
You know that, don't you?
Because we're less risk. We're not so crazy.
That's probably right. The level of coverage you need drives your costs. And so, do I need what we call full coverage where I've got collision and comprehensive included or not? Your vehicle. Teslas are wonderful cars. They're expensive as heck to insure. where zip code, where you live in the city of Seattle will affect your rate. I have customers that tell me they've moved, and I either have good news or bad news.
Wow.
They moved to a different zip with a different kind of community around it.
Yeah.
The rate can go up, the rate go down.
Now, is that because of the chance of risk that something is going to happen to the car, like theft?
Correct.
Because obviously it's not having an effect on accident prone.
It actually is connected to that too, because if you're commuting or if you're living in an area where we know that there's a higher incidence of accidents, that affects you. Most people have accidents within 1 or 2 miles of home, so it really does affect that.
Yeah. So, John, how does this all come together for an average consumer?
Well, this is why I say you have to shop. Literally, you can get yourself rated with 10 companies, have 10 different numbers in terms of what you're going to pay for a premium. And it is affected by a lot of factors that you're going to experience every day. In the world you drive in. So I always tell people that the average consumer should shop, especially if you're new to an area.
Okay.
I had a customer today moved from California where they don't have credit scoring. She had terrible credit, and I had the bad news of telling her we had really had a high rate for her. I have other people move from California that don't know how great their credit is. They move here, and they get phenomenal rates. So the reality is, and although I represent one company, the prudent shopper is going to shop, and that's just life. And we either have a product that works for them or we don't. So I encourage everybody to shop. I mean, we're not talking about customer service yet. That's part of it you're buying.
Sure.
And maybe you can talk about that in a little bit in the future here.
Well, it's just like, just since you mentioned it, I mean, I always say discounted rate equals discounted service. So you do have to be cautious at a discounted company. But it is interesting to hear that different companies, the algorithms or how they're looking at it are going to be different in the rating. So something can be more favorable to you. So, John, we all hear a lot about purchasing insurance online. And I know that you're an agent who owns an agency in Downtown Redmond. Tell me what the perceive to be the pros and cons for shopping online.
Well, the pros are obvious. Theoretically, it's cheaper. They don't have to pay for the brick and mortar. And you buy what you want. Nobody's going to tell you what you should have. You're going to buy what you want. Again, I'll talk about that when I think about what agents do. It's information at your speed and the terms you want it to have. I would say you can literally buy insurance in your birthday suit at 2 in the morning.
Sure.
And that's the advantage of online.
Scary.
Well,
well, maybe not. I guess never mind. Go ahead, John.
Your quotes are instantaneous, and it's the millennials love it. That's bottom line. So the buy what you want, that actually I could think could be a challenge only because you're not having an expert coach you and help you to decide not necessarily what you want, but what you need, which ultimately becomes what you really want in the end. Also on the line, I just compare with mortgages because it's the same thing. I mean, you go online to get a mortgage and get a discounted rate, but you don't have that brick and mortar and that service in the local market that's helping out through the customer service process. So important. John, how does this compare with someone who calls you? What do they perceive to be the pros and cons in shopping with you as an agent? Well, you've got supposedly the expense of me running an office in downtown Redmond, but the reality is most online companies now sell in a brick and mortar as well. We've kind of merged these two things together, so there's not really that competitive edge, and pretty much the quoting is based upon that algorithm. No matter who you're selling to, you can go farmers.com. We can offer you a rate there. However, I get those leads directly to me, and I end up having to close on them, and usually they're not quoted correctly because the person's quoting themselves. You have to deal with an intimidating agent when you walk into my office sometimes because I'm going to look at your situation and say, geez, you got state minimums and you need more. So the quotes
my listeners could see you do look a little intimidating, John.
Yeah, I'm a big burly guy, yeah.
You big teddy bear.
The quotes are just about as instantaneous with me. And actually, the reason they take longer is because I'm going to push for some answers to some questions that you may not find online. You can shop from home, too. I do it on the phone almost all the time. And the big difference between myself and I'd say and any brick and mortar agent is that usually we're going to give you the customer service when you have a claim that we're going to talk it through. Yeah. I use the example, and anybody who's got a home knows this. A tree falls in your house, call claims. It's important. It's not going to be a question of coverage. But if a tree falls on your fence, let's talk about what that might cost and why you might not want to have it go through the claim. The challenge for an online company is there really is nobody to talk to you about that. You call them and they'll say, well, tell me what the claim is. And you say, well, should I make a claim? They're not equipped, and they will not advise you because they can't.
Yeah.
You're not dealing with an agent, in other words.
Yep, it makes total sense. John, since the insurance industry uses algorithms to create your premiums, how would you advise the average consumer to shop for their home and auto insurance?
When you come to town and you're looking for pricing, tell everybody to have any agent you work with, the spouse and yourself together. One is the lead, one is primarily insured, and you'd be surprised what the difference between spouses can lead you to in terms of cost. I had a customer, again, come from California. We quoted it both ways. The husband had not the best credit. It's a credit-driven system. The wife had much better credit. We saved him $800 a year by using her first. So that's what I'm saying.
I had no idea that the order of the spouse made a difference in insurance.
It does with farmers. It does with most of the major companies. Yeah. So try it both ways. Once you're in, I can't switch it. But
got it.
On the front end, I can.
You can run the different scenarios, figure out what the algorithms are going to do and what the premium spits out. Correct?
Right.
Yeah.
Right. Keep your. If you're at the state minimum and we quote you, that reflects negatively on you, and you actually have a higher premium than if you come to me already with 500 combined single limit or 250, 500 bodily injury. In other words, if you care enough about yourself coming into my office with high insurance levels in terms of protection, it actually helps your costs go down, not up.
Yeah.
It's the irony of the way it works.
Interesting. So, John, are there other factors that you should be aware of when purchasing insurance?
Yeah, keep your credit score high.
Yeah.
It affects you every time.
Well, it affects you in everything.
Right. Try to purchase more than monoline. In other words, you get a discount. Every one of us gives you a discount when you purchase more than one policy from us. So have your homes and your car with one party. If you're moving, like I said, get a new quote because your new address will affect it.
What about the number one problem that you see with customers shopping for insurance today?
They come into my office. They've been they're in their early 30s. When they got out of college, they had this $25,000, $50,000, and $10,000 bodily injury coverage on their car. 10, 15 years later, they now have a house, a kid, and 2 or 3 cars, and they still have that level. What that means is if they get in an accident, that $25,000 for one person or $50,000 for everybody in the cars, all the coverage they've got. They now have a net worth of over $500,000 or $1 million, and that's all exposed in an accident, and that's why you buy the coverage in the first place.
Yep.
So, and it's amazing how often I find, especially these technological wonders that work for Microsoft and other high-tech companies, they haven't looked at that policy since they graduated from college.
Yeah.
And
so like anything else, you're talking mortgage, real estate, finances, is talk with your agent on an annual basis, get things updated, and especially if there's any life changes. We've got 1 minute to go to commercial, but I do want to ask one other question here. Consumers sometimes get confused with their homeowner's insurance being less than the value of your home. Can you share the difference between replacement value and home value?
True. As any real estate agent or mortgage broker knows, the house is not worth what the marketplace says it is. It's what it costs to replace it. And that does not include replacing the land.
Yes.
So the key factor is making sure you have enough insurance to cover the cost of reconstruction. I recommend everybody look at a guaranteed replacement policy.
Okay.
It covers you no matter what the cost of replacement is.
Great advice. John, thank you so much for joining me in studio for the first time. It was a real pleasure, and I look forward to having you come back.
I'd love to be here. Thank you, Tina.
Coming up next in the Money Hour, should you roll over your old employer retirement account or not? We'll have Tony Sablon with Ultimate Wealth Strategies right here on 1150 AM KKNW after this short break.